myself Vaibhav. In today's session, we are seeing the dollar is in retreat and against most of its major peers, including the euro and the yen. It is on decline, and we will see how we can exploit this situation to our advantage. So we can now get started with the trading context. If we consider the data rocket for the day, apart from two releases which were of importance, which were released in the early hours of today's session. So we had this Reserve Bank of Australia's monetary policy announcement, and as expected, it has left the interest rate unchanged at 0.1%, and it has reaffirmed the commitment to continue with the accommodative monetary policy. So there were no surprises coming in from the RBA. Later in the day, we also got the unemployment rate for the euro area, which is seeing uptick at 8.3% for the month of February 2021. And I think this is not likely to last given the backdrop of easing of economic restrictions. And we are likely to see the unemployment rate again getting closer to 8% in coming months. And apart from the data rocket, if we consider the political and economic development, we got this revision in growth forecast from the IMF, and it has now revised the world GDP growth rate to 6% for this financial year from its October 2020 forecast of 5.2%, as IMF has taken into consideration the large stimulus support coming in from the US government, and also other major economies are also chipping in, and as a result of that, we are likely to see a faster recovery in the economy of the world. And given the other important factor of picking up of the vaccination drive, that is also going to contribute, and as a result of that, as a result of these two positive influencing factors, the IMF has upped its GDP growth forecast. And moving back to the markets, if we consider the today's session, we are not really seeing any big moves on the equity front. Of course, if we consider the currency market, there is a sharp move in the dollar. But on the equity side, we are not really expecting any big move. And I think even today's session and next few sessions are likely to be the consolidation phase for the equities, considering that most of the major equity indices are trading closer to their all-time highs, and I don't really think there is much room left for the further growth. So we are likely to see sideways momentum prevailing. Now moving on to the technical outlook. First, we will consider the USD JPY, and then we will consider the Euro USD. Let's start with the USD JPY's technical outlook. This is the daily time frame chart, and here, after spending time closer to the 111 level, the USD JPY has now given up on those highs, and it has even declined below the 110 level. And I think the probability is quite good that it might get closer to the prior swing high, prior consolidation phase levels closer to 109. And if that is going to happen, I think we can, of course, start looking for some opportunities to go short. And for that, we will mostly have to rely on the lower time frame charting. And if we consider the 4 hourly chart, here we have this formation of pivot point series where the immediate support is not really too close. We have further room for the correction to deepen on the lower side, and we can expect some support only when the USD JPY will be getting closer to this central pivot point, which is there around 19.4. And as I said, the prior consolidation phase highs, which are also closer to 109, are going to be important factors. So we can expect some support on the lower side, but for the time being, we do have the possibility of USD JPY continuing its decline on the lower side. And if we consider this regression curve, it has also now flattened, and the price action has moved in the lower band of this regression curve, giving us one more reason to take the bait on shorting the USD JPY. So if we have to figure out some levels which are going to cut down on our possible losses while optimizing the profit levels, I think we will have to rely on these prior consolidation phase lows closer to the 110.4. Even in today's session, we had slight uptick in the earlier hours, but later on, as the US session got near, we had this steep decline starting closer to the 110.5, and now as yesterday's lows have also been broken, and now that USD JPY is below the 110 level, I think in near term this 200 SMA zone, which is also closer to the prior swing lows, is going to be a key marker. So as long as price action stays below it, we can continue to look for shorting opportunities while keeping the stop loss anywhere closer to the immediate high. Today's session's high of around 110.5 should be good enough. Pardon me. So here, the opportunity is there for looking to go short in the USD JPY. So you can look for selling opportunities closer to this immediate resistance zone, and for that we can rely on these two key technical factors. So I think watch out for further retracement from the current levels, and if it gets closer to this 110.10 to 110.20 price band, and if we see some sort of consolidation there, then I think that will be the time to look for a fresh entry with a possible target can be with possible target coming closer to 109 on the lower side. And as I said, the stop loss should be kept closer to the day's high. So we will be getting the risk reward ratio closer to 1 is to 2. Now moving on to the Euro USD. This is the daily time frame chart, and here after getting support closer to the 1.17 level, the Euro USD is seeing buying momentum on the lower side. As I remember, in the last session before the Easter weekend, I had talked about the possibility of EURUSD continuing to move on the higher side and eventually getting above the 1.18 level. So that anticipation has come true. And if any of you had gone for trading opportunities in EURUSD as per that session's recommendation, you might be sitting on good amount of profit. Now what is done is done. So here, if we want to look for fresh opportunities in today's session, I think we will have to play the waiting game here. So if we are going to go for the trade, we will also have to keep in mind that it has rallied substantially, and the focus should be on optimizing the entry point so that we don't really have to keep the stop loss too wide. And from that point of view, we will mostly have to rely on lower time frame chart. So here, looking at the 4 hourly chart, we have this central pivot point coming into play closer to the current levels. And if I feel, if we see that Euro USD is able to climb above this central pivot point and hold the ground, we are more likely to see the near-term change, near-term reversal in the Euro USD trajectory, and in due course of time, we can even expect the Euro USD to climb toward this 1.2 level. But in today's session, we will have to watch out for the price action and how it evolves. At the moment, I don't really think we can go for the fresh trade as it is sitting just below this immediate resistance. So if you are looking for fresh trading opportunities, then I think price level of around 1.18 is a good trading zone to keep an eye on. And if we see some correction, maybe by tomorrow's session, after getting closer to this resistance zone, then after consolidation, we can look for the buying opportunity as long as 1.18 level hold, or otherwise we can even look for the buying opportunities if we see that the break is there on the higher side, and after that the Euro USD is able to hold above these key levels. So in both the scenarios, we can look for buying opportunities. but for the time being, we will have to sit on the sidelines. And if you consider the regression curve, it is just the inverse of USD JPY. Here, it was in a steep decline, and then as the price action has entered into the consolidation phase, we are seeing flattening of it, while the price action has moved in the upper band of this regression curve. So moving forward, watch out for these prior swing high zone, and I think these consolidation phase lows are also going to provide the immediate support for the euro USD. So looking at that, we can look for the buying opportunities if we can get the entry anywhere closer to the 50 SMA in tomorrow's session, after we see some sort of correction and consolidation, and that will reduce our stop loss levels. We can keep the stop loss fairly sharp. I think if we are looking for the entry anywhere closer to 1.18, the stop loss can be kept just little below the prior swing high. So the stop loss of anywhere around 1.178 or 1.177 should be good enough for entry above the 1.18, while targeting the price levels closer to 1.19 eventually. So by the end of this week, we can expect the Euro USD to get closer to those levels. And with this, the technical analysis is also is also coming to an end from my side. And if any of you have any query or any idea to share, you can write to me in the feedback section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Have a fabulous day ahead. See you next time. Till then, goodbye. And of course, don't forget to subscribe to the Decoscopy webinar channel.